Every once in a while, we find a company that is undervalued and has really good financials, maybe good contracts and news, and is starting to realize some of their market cap, and we find them at a low market cap. One of the good examples here is CTM stock. CTM or Castellum Inc. is a stock we started covering here back before the start of 2025 and really started to jump into it after this spike here in February. And they are a defense company that specializes in cybersecurity. We saw them push up from about 15 cents a share to $3 a share nearly, and then sold back down and have been slowly building this market cap over the last 6 months or 7 months. Now, one thing to note about the company is it almost looks like, pump, you see it get up to that $2.80 range. But I can assure you, based on the company's financials, again, they're such a small company. Their market cap's at 116 million. So I would say that you would want to have caution investing in it, but also realize that this swing up here into this $2.83 range is not too crazy, given that it basically was just around 100 to $200 million that was influxed into their financials that caused that push up. So this is the story for the company. They just recently reported earnings about 2 days ago. They came in with more debt reduction and narrowed their net income even more. And they had a record quarterly revenue up to about $14 million in the last quarter that they just reported. So basically, we've been watching them very consistently through 2024 into 2025, and they've been holding this $11 million a quarter revenue. They came in with 14 million, which is not updating here yet, but 14 million in revenue with a net income of just negative half a million. So their balance sheet also has been really pushing up into total assets totaling about 41 million. And in the recent quarter, they also reduced their debt even more. So their debt was reduced down below 5 million, I think it was. Let's see, they got up to 14 million in assets. They reduced their debt by 3.7 million. So basically, they came in even more bullish and a more disciplined balance sheet. So this blue right here is their total assets, and this orange is their liabilities. They reduced their liabilities, so the different debts that they owed, and they increased their assets. So the amount of cash and assets they have in the company increased. So why is this a company we watch? Well, they recently signed a $100 million contract. And we're looking for more contracts, no doubt about it. We're looking for more indication that they're going to continue to grow, for sure. Because it's been a little bit since they've had some contracts. Been a couple weeks or even a couple months at this point since they've had any big contracts. They've had a few smaller contracts, here and there. But one of the notable ones that they signed after getting into the IDIQ contract, so on demand for the government, was this $103 million contract. Now, when they signed a $103 million contract and their market cap was only at 87 million, it made a lot of sense for us to follow them. So we've seen them now grow their market cap to 116 million from 80. And not only that, they have a contract that is basically, almost 100% of their total market cap. So they are on the right track. Their revenues are good. The financials are good. And with this recent one, what is this contract? It's for working with the naval air systems. And specifically, they work on engineering. They do some of the software side of things and cybersecurity. But in this case, they're working on mission support systems. So this is going to be development for ground and mission support and future capabilities, whether it's intelligence, surveillance, or reconnaissance, the ISR&T programs, but they're not limited to that. They also are doing machine learning, and they're building out some more software engagement for their customers. Now, what we've seen is they still, they're kind of smaller. They got around 250 employees, but they've been around a while and they have some good contracts. And they're in Virginia, Vienna, Virginia, in the United States, which is right where a lot of government contracts could be, I would say, more easily secured. So this is the deal. They're starting to build this market cap. We've seen them go from the 60 cents up to this $1.60 range in March, selling down into April with the greater market, and then building their market cap up and swinging and trending up into these levels. Now we were able to catch a few swings here actually of about 50%, I think it was back in February here. Where was it? Let's see. We caught this one right here, which was a tremendous move. It was about a 120% move, and we were able to catch about 50 to 75%, somewhere in here in our daily live trading session. So basically in about 15 minutes, we were able to catch this move. I think it was right here. I think the exact move we caught, I can't quite remember, but it was right in March. It's like a 40% day, something like that. And then something like that. And we've been trading it quite often. So we've seen it start to build this market cap. Why would you look at it right now? Well, there's this 200-day moving average, this green line that oftentimes acts as a support if we're in a bullish environment. It is starting to act as a support, and that validation of that uptrend here, we start to see it kind of continue its direction upwards. Now, we are at a level where it's a key level for it to validate. It's going to be right here, this resistance here we saw back on June 5th, and actually goes back further than that. You can see this resistance level goes back further. See that resistance, resistance, resistance. Can't really see because I was drawing here. But then you got this level here, so resistance level, and then previous support right here. So resistance, support, support, and that's kind of where it's at right now. It's kind of breaking out of that resistance right there. So a really key level to be watching at the moment is this $1.20 range. So this $1.20 range right here is going to be the nearest support level. Now, it's pushed up above that EMA, that blue line. So oftentimes that blue line will act as a support as well. You can kind of see here in an instance when it's bullish, this blue line acting as a support, and it's continuing up, kind of acting as a support. See that blue EMA, that's our exponential moving average. And then when it's a bearish trend, it's going to be acting as a resistance. It's going to struggle to get above that EMA, maybe even cross below that 200-day. See how it's holding below that EMA, and it was really kind of bearish for a little bit there into July. And then now we start to see it again push back up above that EMA, start to try and continue this trend. And the nearest support, again, it's right here around $1.20. And the nearest margin for profit we'd be looking for is actually getting up into here, this $1.50 range. It's been a while since we got up there, since about July. I think it's been a little bit less than a month. But we're looking for this swing right here. So you got a resistance level. We're looking for a minimum of about 10% to potentially about 20% there. Now that's actually the more conservative bull run. The more hyper bull case would be kind of getting back into these levels, continuing a trend like this up to $1.86, or even up to here at about $2 a share, which is a 72% increase. So we've been watching it. The idea is that they have good financials, they have good news. There's not a lot of hype articles. I love how there's not an article every single day that's saying buy this before it's too late. This is the next 100x or what have you. I love that that's not the case with Castellum Inc. And I love that, if you look at their financials, they look good. The only issue that you might want to consider with Castellum, number one, they are low market cap. So while that means they could surge very fast, they also are seeing what could be some really volatile movement. So if you pull up NASDAQ, for example, and we go to, let's say CTM, and we see the financial holders here, it's pretty clear that we're seeing some increased positions, more increased than decreased, so bullish. You got Vanguard buying them. Okay, State Street and BlackRock do own some shares. All right. And you got Bank of New York there. And maybe a little bit a little bit of investments there from Bank of America, but mostly you got BlackRock, Vanguard, and what have you. And institutional ownership is low. So institutions are only owning 4% of this stock, which means that, if institutions, this could be institutional attracting value. Imagine, that number, gets up to a level that would be, I don't know, similar to another stock. Like if you pick another stock, let's say Big Bear AI, if we go to their holders, institutional ownership is at 44%. So this stock, while it is a penny stock, might not be as easily manipulated, and it's kind of still under the radar with the low institutional ownership, which I like. I actually like that. So that's what we're going to be watching. When this move potentially happens, we'll be following it at market open. We've been trading tech, AI, quantum, and space stocks. And if you want to stay up to date on the stocks and you want to learn how to trade them, then I would encourage you to check out the second link in the description for Stockmates. If you want to learn the ins and outs of the companies, how they are performing around earnings, what targets we have for the different earnings, and when they're reporting earnings, but also get our live sessions every day at market open, right at market open, about 6:30 a.m. Pacific. It's the second link below for Stockmates. I'll also send you a free t-shirt, which is super exciting, anywhere in the world for a limited time. And it's the second link below. Appreciate you all. Hopefully you have a great rest of your day. And if I earned your thumbs up, smash that like button. Do consider subscribing and comment your thoughts below. See you in the next video.